Ladies and gentlemen, good day and welcome to Lloyds Metals and Energy Limited Q2 FY24 earnings conference call hosted by Equirus Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Gadekar from Equirus Securities. Thank you and over to you, sir.
Hi. Good afternoon, everyone, and thanks for joining us today. We at Equirus are pleased to host Lloyds Metals and Energy's 2Q FY24 results conference call. We have with us today Mr. Rajesh Gupta, the Managing Director, and Mr. Riyaz Sheikh, the CFO. Now I would like to invite Mr. Rajesh Gupta to initiate the proceedings for the results call. Thank you.
Ladies and gentlemen, good evening and welcome to our Q2 FY24 and H1 FY24 results conference call. This is our first earnings call and I would like to welcome you for this. We are delighted to share with you all our company's remarkable performance and achievements for this quarter and this half year. I'm pleased to report that the company's performance for H1 has been nothing short of remarkable in terms of both growth and achievement as well in top line and bottom line. We have achieved this through strategic planning, hard work and dedication from our exceptional team. The outstanding performance in the iron ore and DRI sector have significantly both contributed to our success. Our iron ore volume for H124 have surged by 115% year on year, and DRI volumes have grown by 25%. These strong results reflect our dedication to operational excellence and efficient resource management. One pivotal moment in our journey was when we got our approval from 3 million to 10 million ton for our mining from the EC, Environment Clearance. We swiftly acted on this and already in the first half of this year we have achieved more than 5 million tons. On the DRI front, we have recently commissioned in the last part of September our greenfield plant at Concall of 70,000 tons. This is the first plant in Gadchiroli district after around 35 years, first industrial setup of any kind after 35 years, and we have commissioned it within 13 months from the final clearance, that is again environment clearance. This would be for a greenfield plant in any area and particularly in a difficult geography like Gadchiroli. It speaks volumes for our execution team. DRI volumes apart from this have grown by 25% like I mentioned earlier. Some of the questions raised by analysts are regarding our realizations and cost structures. Our realization of iron ore are particularly aligned with market dynamics, and our cost for mining remain very competitive, and therefore our cost also in the DRI sector. In iron ore particularly, our exemption from additional premiums and royalties of up to 120% over and above the normal royalty of 19.6% is giving us a very big advantageous position as far as commercial mining is concerned. This is because our mines fall under the allocation route. We are further committed to enhancing our competitiveness. One of our weak points currently is transport from the pipeline, from the mine to the stockyards. And for the pellet plant, we will be commissioning Western India's first slurry pipeline. This will reduce our cost of transport substantially and bring us on par with any other manufacturer of iron ore. Looking ahead to our future prospects, we have laid out an ambitious roadmap. Iron ore, we are now talking about 12 million tons from 10 million tons. This is under the automatic EC route. When I say automatic, it means that no public hearing is required and the process will get over by this year end. On DRI and steel making, in Chandrapur. We will be commissioning we have started up the project for doubling our DRI capacity, more than doubling our DRI capacity, as well as adding a steel melt shop and wire rod mill with a capacity of 1.2 million tons. This is through the blast furnace and arc furnace route. In Gadchiroli near the mine, I mentioned earlier about the pipeline, and that pipeline will be used to feed a pellet plant in the initial stage of around 4 million tons there. That will give us a total capacity of a pellet capacity of 4 million tons, a DRI capacity of 3.4 lakh tons, and a power capacity of 34 megawatts. The combined capital expenditure for these projects is estimated to be around 6,300 crores over a period. We're also actively working toward expanding our mining capacity, like I mentioned earlier. These projects should all be commissioned. We are quite clear that they will be commissioned without any external loans and only through internal accruals. And our robust cash flows would support this very comfortably. And the whole plan is based on that. Beyond this 3-year plan, we are looking at, in that region where we already are, we are looking at developing 3 million ton HR plant, which is under study right now. So that is where we are, and now over to Riaz, please.
Thank you, Rajesh. Ladies and gentlemen, good evening, and thank you for joining us on our company's maiden earnings call to discuss the financial highlights for the first half of the fiscal year 2024 and the second quarter of the same year. It is great to be before you today to provide an overview of our strategic direction. Let's dive straight into the numbers. In H1 FY24, our revenue reached an impressive 3,089 crores, marking a remarkable 100% year-on-year increase. EBITDA for the same period stood at 854 crores, showing a substantial 92% year-on-year growth. Our EBITDA margins remain steady at 28%, and our profit after tax for H1 FY24 was a commendable 635 crores. Our numbers for H1 are more than 90% of the numbers of FY23 full year. Now turning our attention to the second quarter FY24, our revenue reached 1,111 crores, demonstrating a substantial 62% year-on-year growth compared to the same quarter last year. EBITDA stood at 306 crores, reflecting an impressive 81% year-on-year increase, and our EBITDA margin stood at 28% in quarter 2 FY24 compared to 25% in quarter 2 FY23. Our PAT for quarter 2 FY24 reached 231 crores, a substantial 107% growth year-on-year. Moving on to our operational highlights, our iron ore volumes for H1 FY24 reached 5.4 million tons, showing remarkable growth of over 100%. Meanwhile, DRI volumes reached 115,000 tons, a 25% year-on-year increase compared to 92,000 tons previous year. Regarding realizations, our iron ore realization in quarter 2 FY24 were at 4,600 rupees per ton. DRI realization stood at 31,700 rupees per ton, and power realization at 4.6 rupees per unit. One of the most significant milestones for us was the commissioning of a greenfield DRI plant in Concall with a capacity of 70,000 tons. This achievement, completed in just 13 months, speaks volume about the strength and efficiency of our project team. As we move forward, we are actively pursuing our strategy to become a value-added steel maker with plans to reach a wire rod making capacity of 1.2 million tons. We expect these capacities to come online in FY27 and FY28. We intend to apply for an expansion of our iron ore mining capacity to 12 million tons, which will further enhance our cash flows. Speaking of cash flows, we remain committed to financing our capex plan through internal accruals only. We are confident that our cash flows will comfortably meet the tasks we have set for ourselves. Now I look forward for your questions and discussions. So over to you, Siddharth.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Jatin Damania from Swan Investment Managers. Please go ahead, sir.
Thank you, sir, for the opportunity and thank you for the call. So just wanted to understand, in first half we did 5.18 million tons of the volume, and for full year we are guiding for a 10 million ton. Now with the EC approval is yet pending, do you think that we will be able to do 12 million tons of the iron ore next year, or we probably hover around the 10.5 million tons for FY25?
So, thank you, sir. The way this works is that once the EC is received, we get the additional quantity pro rata for that part of the year. We expect to get that additional EC only by the end of the year, end of the financial year.
So what is the maximum permissible EC? Because we were earlier doing 8 from 8 to 10, 10 to 12, we will be reaching it. What is the maximum permissible EC or the limit that we have for a mining operation?
Earlier it was 3 million tons, not 8 million tons. It was 3 million tons. He got enhanced to 10 based on an application and a mining plan given by us. 10 to 12 and then to 14 is a process where the so-called automatic, but not really automatic, but what is avoided is the public hearing process.
Right.
So up to 14 is without the public hearing process. Beyond that, we are re-evaluating our reserves, for which extensive drilling program and exploration program has been achieved, and we will be also making a mining plan. All this is being done under the aegis of Tata Steel, who have a mining division who is helping us into that on a professional basis, and we'll be able to come back after that.
Sure, sir. And that sir, last time when we met, you had mentioned that we have a huge reserves of BHQ. And as per my limited understanding, we require a thorough process and no one in India is doing this scale of beneficiation. So just wanted to understand what scale of operation we are studying to do a beneficiation in terms of size, and what will be the cost and the technology we want to use or evaluate for the same.
Sir, you have mentioned the word study and then you are asking all the detailed questions, which is an anomaly. Number one is that in India it will be the first time being done. It is not the first time in the world. This process of beneficiating from BHQ, which is banded hematite quartz, is very well used in China. We have studied plants where there's a 22 million ton plant per annum of input. Based on our mining plan, etc., we will be able to come up with a final number very shortly. In the next 1 or 2 months is where we are expecting our final reports to come in, where we would be able to explore and define our mining plan over the life of the mine, which is in 2057. The initial studies have shown that we have around 180 million tons of hematite ore, which we call direct sales ore, and 630 million tons of BHQ. These are the initial studies, and those final numbers are being derived, and the resource report should come in the next 1.5 months. The reserve report should come in the next 1.5 months, and the DPR and the resource report, which will be JOC approved, would come in around 3 months post that.
Okay, so by end of this financial year, we will get a more clarity on the
total clarity will be there by the end of this financial year on number one, the reserves of both hematite and BHQ. Number two, how much and how much quantity of BHQ would be beneficiated. what will be the quality of it, what will be the yield of it, and the capex of that.
Okay. Sure, sir. Thank you. That's all from my side. I'll come back in the case I have any more questions.
Thank you. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 on their touchtone phones. The next question is from the line of Mr. Patil Shah, who is an individual investor. Please go ahead, sir.
Hello. Thank you, sir, for taking my question, and congratulations on decent set of results. Sir, my first question is, I was just checking, sir, ever since the mine operator, Prabhakaran sir and his family has joined the board and also taken stake, I just want to understand now the company has kind of multiple families as promoter. So what roles and responsibilities are demarked for each member? Could you throw some light on that, sir?
Triveni Earth Limited is the MDO, and as well as they are the promoters, co-promoters of the company. My family is the original promoter. Mr. Prabhakaran, who is the MD of TMPL, is also the MD of Lloyds Metals. His role is currently, he focused more on the mining aspects of the mine, of the company, as well as of the startup of the project, especially the environmental and the outside battery limit issues of the area, which is a very difficult geography, to make sure that we can start up this greenfield plant in a non-industrial area in a very correct way. And that has resulted in the quick turnaround of the project at Concall. With him, we now have 5 co-promoters on board. Mr. B.L. Agarwal, he's the erstwhile MD, and my uncle, he's around 76, 77, and taking over a mentor role as a vice chairman of the company. Mr. Mukesh Gupta, who's the chairman, is the overall guidance and force behind all our energy. Mr. Prabhakaran's role I mentioned. My role is to look at the finances and look at the operations, and Mr. Madhav Gupta, who's the director, his role is on the day-to-day operations of Govos and in future operations of Concall as well. Mr. Venkateshwaran, who's an executive director, has been with the company for 2 years, and prior to that he was professional working in Triveni, and he is the director and the mining agent for our company.
Okay. Yeah, sir. Thank you. Sir, I just want some sense on the volumes for FY 25-26. Any estimates you can help us with?
So 25-26, definitely we can see a horizon of 14 million tons by the end of the year. So it will be 12 million tons for the full year, and maybe for 3-4 months it will be pro rata, say around 12 plus 1. So let's say 12.5 to 13.5 tons, 13.5 million tons of that. Plus we see DRI at full capacity of 340,000 tons by that year.
Okay. So you're looking at another 2 million ton EC over and above the 12 million ton EC that you have proposed.
So like I mentioned, this is a 20%, 20 plus 20 rule is applicable, and we are hoping to go in that direction for this.
Okay, understood. And sir, your mine life is lease is till 2057. So what is going to be the strategy like? Would you like to extract more ore, and based on the reserve data, which will eventually come, giving more details? Do you have a strategy where you would prefer to kind of end this mine way before 2057, or you are okay with trying to have the mine run till the lease?
So your question is a double-edged question. You're indirectly asking me what is the reserves. I'm saying 14 million tons I'll do next year or next 2 years. So the reserves are not yet frozen. I didn't mention what is the non-frozen figure is 180 plus 635 million tons. We're a little northward of that, and we hope that the mine will continue for the life of 2057.
Okay. So, all the CapEx that you announced, if I'm not wrong, you're getting some 110% incentives for all the projects, or there are any exemptions? Can you throw some light what sort of benefits you will be getting for doing this CapEx?
So, we are operating in 2 districts of Maharashtra. Both are Naxal affected districts. In Gadchiroli, we are getting 150% of the total project cost that would be invested by us for both these projects. That is the pellet plant as well as the steel plant that we are talking about. Steel plant is not yet approved by our board, to be very honest. So that 150% we will get through 2 routes. One is the 9% state GST, SGST, that whatever we sell in the state, that 9% will be refunded back to us over the period. Plus whatever iron ore we use, the royalty of that would be refunded back to us with a cap of 150% of the total project cost. In Chandrapur, where we are putting up the steel plant of around 4,000 crores, there the cap is 110%, but that is only against the state GST. There is no royalty refund there.
Okay. Sir, regarding the...
So in effect, correct if I'm wrong, Riyaz, this would in effect cover, especially Gadchiroli would cover our total project cost over the period of the project plus the interest thereon.
Yes. Over a period of 12 years is what we get this money back.
Okay, got it. And so the last question is regarding the pellet JV. Just a request, just one last question, so I don't have to come back in the queue.
Could you rejoin the queue, please, because we have other participants also waiting
Okay,
in the line.
fine. No problem. Sure.
Thank you so much.
Thank you.
Before we take the next question, we would like to remind all the participants that you may press star and 1 to ask a question. The next question is from the line of Mr. Rakesh Roy from Omkara Capital. Please go ahead, sir. Hello, Mr. Rakesh?
Hello.
Yes, sir, you're audible.
Yes. So my first question regarding sponge iron business. Sir, on your sponge iron business side, if I see your revenue come down 12% year on year, sir. But sir, same what EBIT is come down, EBIT margin is come down to 4% compared to last year same period that made by 4%. Any reason behind this, sir?
Yeah, this quarter we had a plant shutdown, and since it's a seasonally weak quarter, everywhere this if you see all these steel companies all on there, they're usually on a shutdown or any maintenance shutdown is all taken in this quarter. The offtake is lesser, so we had that's the only reason why it has been done.
Okay, I agree with what the shutdown happened in Q2, but last year same time shutdown happened, sir.
Last year we did not have this complete maintenance plant shutdown. It was not that. This year it was a complete maintenance shutdown, so we were completely out.
Okay, so how much is the revenue impacted from this one, or if you go for
Applying 12,000 tons into around
30 crores, 35 crores.
35 crores. Okay, sir, great, sir. Also, my next question regarding, sir, you have, sir, in Gadchiroli, you have this one, 10 million, sir, iron ore, plus you are going to set up 4 million for pellet also there, sir.
Correct.
Okay, and 3.5 is a DRI. Already there.
0.35 million.
0.35 million, sorry, 0.35 million.
And 3 million of steel plant.
Okay.
But that is in the future project which is not yet formalized. It is in the planning stage right now.
Currently we have only 10 million of iron ore, EC permission, and 340,000 tons of sponge iron.
Okay, right, sir. Also, recently you have just commission, this is 70,000 in same place, sir, Gadchiroli?
It's in Gadchiroli district, yes.
Okay, that's it. Sir, my last question regarding
includes the 70,000.
Include the 70,000. Again, so it totals the 340,000. Sir, any view about the iron ore prices in near term in next 1 or 2 years? How will it look like, sir, iron prices, sir?
Iron ore prices very as volatile as the stock market. Right now, we are seeing that the prices have moved up from last 6 months from 100 to 110 range, the index, IODEX index, from that to around 110 to 120, around $10 to $12, the index has moved up on a broad basis. Right now, it's at $122.
Okay. Right.
Sir, any chance to improvement in margin because petcoke is come down and it's coming down. Do you see any margin improvement from here onwards?
Petcoke doesn't affect us currently. In India, the steel market has gone up by 15% in this H1.
Okay.
Sponge iron market has gone up by 17%. So the demand is very robust. Seasonally, this was, July to September, October is always weak compared to rest of the year. And I'm seeing that the prices should move back up very dramatically over the new year, that is January, March.
Agree, sir. Any chance to improvement in DRI realization because the country is at 31,700. Any improvement for here onwards?
I'm very sorry to intervene. Could you please join the question queue?
Yeah, sure.
Follow-up questions.
Sure.
Thank you so much, sir. The next question is from the line of Mr. Abbas from Great Capital. Please go ahead, sir.
Yeah, thanks for the opportunity. So I have a couple of questions related to your pellets. Again, if you see the feed marketing 2 MTPA capacity we have tied up for. So sir, are we targeting domestic or export markets particularly?
So here we are, this is a very nice opportunity that we have got. Apart from the seed marketing is one very big benefit we are getting because when we go in for 4 million tons, as a company, it will be the first time and one of the bigger plants in the country. So this would help us to enter into the market over a more steady and gradual pace. The market would be, our job is to sell iron ore and consult with them and to make sure that they make good pellet out of our iron ore. And whatever we can buy from, so that is the one hat that we have. This hat ensures that is an iron ore miner hat. It ensures that we get better value of iron ore throughout the year. Even in lean period, we have a assured customer. And the second advantage as an iron ore hat is that without paying of export duty, we can, when the party wants to export it, they can export it or export it through us. That is the first hat. As the second hat, as a pellet manufacturer, like I said, it's a good seed marketing strategy for us. And also we have understood how to make this high-grade pellet with low-gang material. To that effect, we are branding our product as LML Pel, which is a nice sounding name, but it is one of the first and highest grade product of pellet in India that we will be selling. And as a trader, we have done one shipload right now. The margins of these trading, as when we buy and sell, would not be very high, which is the want of the trader. But it helps us in the overall marketing and knowing the customers. I hope this answers your question.
Yeah, that was helpful, sir. Yeah, thank you, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Mr. Mehul from Desero Consulting Private Limited. Please go ahead, sir.
Sir, can you tell us what kind of capex we have incurred so far on our steel plant and also on DIY plant?
On the capex, what we have incurred till date is around 740 crores, and we intend to be doing a capex of, as Raji said earlier, it is around 4,500 to 600 crore rupees over a period of 4 years, and everything we intend is to be done through internal approvals. So we'll be placing it over the period of over the 4 years from our cash flows.
Okay. And one more question. This pellet marketing, how do we see that impacting our financial or profitability?
Immediately, just being a trader, as the previous question was answered, just being a trader, it would just help us. It won't be a major impact on the cash flows. But yes, it helps us in as a seed marketing thing, and where we realize money. It is not only seed marketing where we spend money. It will be how we'll be realizing. That would be a small portion how it will be benefiting our cash flows. And it gives us the experience of exports. It gives us the experience of the pellet market, which we will be entering into very soon in the next 2 years.
Understood. Thank you so much.
Thank you, sir. The next question is from the line of Mr. Saket Kapoor from Kapoor and Company. Please go ahead, sir.
Yeah. Namaskar, sir, and thank you for this opportunity. Firstly, sir, out of the total output of the iron ore, what portion is towards the external sale and how much is being consumed for our sponge iron unit?
In the first half year, if you see our dispatches are around 5.4 million tons from the mines, but out of which it is 5.2 million which has been sold as to the outside market. Balance is what has been consumed internally.
Okay, and so going ahead also with this EC clearance and our output going to 12 million tons, how is this ratio going to be positioned, and also post the commissioning of the steel unit when it's going 2 years down the line, how should the external sales and our self-consumption would look like, sir?
So over the next 3 years, we'll be commissioning 2 plants, like I mentioned. One is the pellet plant of 4 million tons and a steel plant of 1 million tons. Together, we'll consume around 6 million tons out of the 14 million tons that we are projecting right now.
Right. So currently, what is our pellet production, sir, for the first half? And
right now, we're not producing pellet.
Okay. So what should be the pellet production for this year and for the H2 in particular?
Our first pellet plant will be commissioned in 2027.
27. And the capacity, sir?
4 million tons.
4 million. So, sir, and for the, as mentioned in the presentation about the clientele to whom we are supplying the iron ore, do we have any volume offtake agreement with them, or how does this work out?
There are some volume offtake agreements, and now this agreement with Mandovi. So we have 2 such agreements. One is a pure volume agreement. One is an agreement for conversion of pellet, not conversion, manufacturing of pellet and buying back when we want to. These are the 2 agreements of around 3 million tons roughly. Balance 1 million ton, half a million right now we are consuming, and 6.5 million tons is sold in the open market, which includes consumers from all over India. We go as far east as Barbil, which is the heart of iron ore industry, as west as Hazira and Kandla. In south, we go as south as Tirupati, and north as far as Gorakhpur. So literally our iron ore is sold in all 4 directions of the country, more or less always on a spot price basis.
What will be the lead distance, sir?
The lead distance from the mine to the siding is around 180 kilometers. 160 kilometers from the mine to the siding. From the mine to the stockyard is around 40 kilometers, 50 kilometers.
And this sale to your customers is through the railway route or through the road route, and what percentage goes to the road?
Depending on what is the most viable and most available, is a mix of both.
Correct, sir. Sir, you mentioned last question is about the sponge iron market. You mentioned about the plant shutdown that we took. If you could give us some more color on how currently the market is shaping up, particularly for the downstream product, for the intermediate product. If you could give some color. I think we have heard about inventory pile-up as being a seasonal impact. So your outlook on the same.
So we don't have any inventory pile-up. We sell our material as and when it is produced. We always have at least 10-12 days orders in hand. Number one. Number two is, like I mentioned, this season is soft. And even last year it has been soft. Last year, say, the prices are maybe a little bit lower than anticipated. But if you factor in the lower cost of coal, it is more or less the same realization that we are getting.
Right. Thank you for the answer, sir. And we hope for the continuity of this also going.
Thank you.
Thank you. Before we take the next question, we would like to remind the participants that you may press star and 1 to ask a question. The next question is from the line of Mr. Nihar Shah from Crown Capital Partners. Please go ahead, sir.
Hello. Am I audible?
Yes.
Yeah. So my question is related to margin. Like in the H1, we have approximate.
Can you be a bit louder? I'm not able to hear you.
Mr. Nihar, yeah.
Hello.
Hello, Mr. Nihar. There's distortion in your voice. Could you move to a good network area?
Hello. Am I audible now?
Yes, you're audible now. Please go ahead.
Yeah. My question was regarding the margins. In H1, we have seen approximate margins, EBITDA margins of 27.5%. So going into H2 and FY25, are we looking at the similar kind of margins after we are seeing some capex going ahead?
So some cost will reduce with the volumes going up. Margins, the fact of two. One is in our control, that is the cost. And in this case, there is no raw material, so the margins are therefore totally dependent on the iron ore pricing. And like I mentioned earlier, that's a very volatile market. Right now, though the steel market is down, the iron ore market is better than last year, the same quarter as the last consecutive quarter. Going forward 1 year, I would not be able to give any kind of prediction.
But as we value add, obviously the margins should improve.
Understood. So, we have seen tremendous growth of around 100% year on year. So will that...
Mr. Nihar? Hello, Mr. Nihar?
Hello?
Yes, sir. You can go ahead now. Yeah, you're audible.
Yeah. I was just asking that we have seen growth 100%.
Mr. Nihar, there's distortion in your voice. So could you move to a good network area?
Hello?
Yes.
Hello. Yeah. I was just asking a question about the growth that we have seen around 100% a year. So is this growth sustainable down the line, or will it face some slowdown?
Sir, I don't think we can commit that anything. Number one, we are supposed to be giving forward-looking statements, but definitely with the volumes that I've talked about, 100% won't be there next year.
Okay. Thank you, sir.
Thank you. The next question is from the line of Mr. Nishant Makreja from InCred Capital. Please go ahead, sir.
Yeah, thank you, and thanks for the opportunity. So I have a couple of questions. So firstly, again, who would be your target customers in pellet in India? And again, also once this 4 million ton pellet capacity comes online, you would continue with this 2 million ton external capacity?
The pellet consumers will be similar to our iron ore consumers, but obviously expanded to include more exports, which right now for lump, obviously we aren't exporting, we're not allowed to export. So the consumers for our pellets would be given a location, Raipur, Chandrapur, all of central India, and also some part of eastern India and southern India. So basically the same freight economics would play, and we should be able to sell all over India. But definitely in our area itself, we see, including our own steel plant, we see a consumption of 3 million tons. So that's one. We would continue with the manufacturing of pellets externally or supplies to iron ore externally and offtake of pellets from them also. The brand, all the pellets that they would sell would be under our branding.
Okay. That was useful, sir. And secondly, again, sir, we have seen that JSW and Shyam again bidding for mines in the areas near our mines. So how should we look at the competition in this area going ahead?
They have bid for composite contract, which is giving them around 10 years to explore the mine and start it. And I believe till now the exploration process hasn't yet started. So it's a pretty forward-looking statement regarding another company, which I would not be able to say when they would start the mine and how that would affect us in a competition.
Yeah, no problem, sir. And as you have said, we are targeting around 14 million of iron ore. So is it fair to assume that the entire volume could be sold in India?
Including this pellet, which pellet would be exported, but yes, most of it we would want to sell into India.
Okay. Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for this session. And I would like to hand over the conference over to the management for closing comments. Please go ahead, sir.
Thank you everybody for this interaction and for our first earning call, and we hope that this would continue over a period, and we hope that we've been crystal clear in all our answers. Thank you very much.
Thank you, sir. On behalf of Equirus Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Thank you.